this next video is going to go over 10.3 and 10.4, which we are taking into consideration our cash sales and credit card sales, and then posting that and finishing that out. So for cash sales, again, we don't really care who we're getting them from. So we're just going to record it as cash coming in. It'll be coming into our cash receipts journal. And we also lump credit card sales in with cash sales. So what you're going to need to remember is that this is here's an example of a report coming from a terminal, basically like a cash register, okay? Because it's a point of sale system. They scan it in, it all comes up. So you can print probably some summary reports from that terminal. And so you can see down here it talks about this terminal summary, okay? Terminal summary. So you're going to see the abbreviation TS, and this is why they call it TS, for this summary, the terminal summary. And you can see we've got it broken down into Visa, MasterCard, debit card, and actual cash. And then we have all the totals down at the bottom. You can see sales tax is calculated for all of those. So really, when we're looking at our cash receipts journal, we're only concerned with these numbers down here. Okay? We'll be concerned with the breakdown when we're getting our cash deposit ready to go to the bank, because these aren't going to be cash in our hands, right? This is all going to happen electronically. The bank's going to take care of that. This is the cash we're going to have to physically take to the bank. So we will need to know the breakdown between credit cards and cash at some point, but for putting it into the cash receipts journal and getting it recorded, we just are really concerned with the totals, okay? And we do, of course, collect sales tax on these cash sales as well. Okay, so we'll flip over. So in the cash receipts journal, we have our general, just in case we need them, our accounts receivable credit. So think about that for a second. The normal balance of accounts receivable is a debit. So as customers are buying on account, it's a debit. It's a credit here because those customers are paying us cash. So if a customer is paying cash from on account, then it's got to be recorded here so that it affects their accounts receivable. Okay, the full amount of the merchandise that we sold needs to go here. We might need to worry about the sales tax if it's a cash purchase. If it's not a cash purchase, if it was paying on account, that sales tax was already recorded in the previous journal, in the sales journal. Okay, so we don't need to worry about that. So this is only going to be used if it's going to be a TS, a terminal sale. Okay, and do notice that again we don't have a specific person. It's just a collection of that day's or that week's sales. And so if we don't have anything, we're just going to use those check marks. Okay, and we won't post these either. And we've done cash sales. We just haven't done cash sales for merchandise. And that's where these two things come in right here, or at least the sales tax comes in. All right, and then we are going to allow discounts. So we may have some discounts if people pay that early. And this is the amount of cash that we actually receive. So this is the amount of the total cash from the bottom of the terminal sale. It could be the amount of cash that they wrote the check for, okay, if they're paying us on account. And you just kind of have to pay attention to all the numbers to make sure you're getting the right cash amount in. Okay. And then again, like I said here, we're paying this, Edmonds Hospital is paying us on account. So we're reducing their accounts receivable and having a cash debit because we have cash coming in. Okay. And notice there is no sales tax payable because it's already recorded in the previous journal. Okay, we already did the sales tax for Edmond Hospital. Okay, and then we're going to look at that discount again. Okay, so again, you saw the 210 net 30. So we're going to have a 2% discount if they pay within 10 days. If it's not within 10 days, they have to pay the full amount. Okay, and so then that's what this one would look like. So Palmer Dentistry owes us some money, but this is the full amount that they owe us, and so we have to record that here to make sure that they're getting credit for all of it. But the actual cash that they give us is going to be less because of this discount, and so we just have to keep track of both of those as well. Okay, the R here is for a receipt, because when they pay us cash, we're going to give them a receipt, and so this is our documentation for them giving us cash. All right, so back to the working together. Basically here we have just some transactions that we'll need to record for September. Page 9 of the cash receipts journal. So in your working papers, you've got this cash receipts journal here. Did say it was page 9. And our first one is for September 3rd. Okay. So received cash on account from Lenny Stanford. And it tells us which sales invoice this is covering, because the sales invoice right here, it actually matches, right? Lenny Stanford. So for this amount right here, he's going to be paying us a little bit of it, or what he owes us. Let's see, what does he owe us? $216. So same companies, 216 is previous before this, but again, that's where those numbers are coming from. Okay, so for 216, 2189 less 2%. So you're going to have to figure out what the 2% is. Again, it's on account, so we do need to put Lenny's name in here. And if you want to put a little note that this is when you pay on account. This is what it's going to look like. Okay? It tells us that this is receipt 264. Now again, they're giving you two numbers. They're giving you an S216 and a receipt 264. So this is covering the previous sales from the on account part. The receipt is when you're actually getting the cash. So we're focused on the receipt for the cash part. Okay. And then the full amount, 218936. So we want to make sure it's affecting his accounts receivable. So 218936. So this is going to always be the full amount that they owe us at that point, or what they're paying, the full amount that they're paying. Okay? And let's just put a note here. Of course, this is when we receive cash, right? This is what this journal is for. We've already taken care of sales tax in the previous transaction. He is taking advantage of a discount. Okay? So this discount is 2%. Get the calculator out. 2189.36 times 2%. Okay, 43.79. Remember, we are going to round when we need to round. Okay? And remember that I need you to go to 2 digits before you move on with the calculations in your calculator. So we're going to make this 43.79. Okay, and then we can clear that out and redo the math. 2189.86 minus 4379. Wait, I don't know if I did that right. 2189.36 4379. Okay, I don't know what I pushed the first time. All right, 2 1 4 5 5 7. Okay, so this is what they're actually writing the check to us for. When we receive it, we'll give them a receipt, and that's receipt 264. Okay. All right, the next transaction is that we recorded cash and credit card sales, and it gives us a number. So this is our full amount of sales, and then it tells us what the sales tax is. So it's giving us those two numbers separately and as a total. Sometimes it may not give it to you, and you're going to have to calculate that 6% sales tax. Okay, so sales tax is per 6%. We'll put that in there. This is for the 6th, and this is just coming out of the cash register. So we don't know who they are. It's not at one of our accounts. It's a terminal sale. Okay, and that way we can know. TS38 is the number they're telling us it is. And then the actual amount of the sale will go here. So the 532630. The sales tax they're giving us 298.15, and then they actually give us the total as well. So 562445. Okay, and that doesn't get posted, okay, individually, because really only this column gets posted individually. So if it's not going to get posted individually, we'll put that check mark there, just like we did cash sales way back at the beginning last semester. Okay, and September 8th, received cash on account from Venice Cafe. All right, so Venice Cafe is paying us something that they owe us. Our receipt is $265, and they are also taking a discount. So $390.34 less a 2% discount, so we'll have to do that calculation. $390.34. $390.34 times 2% is, again, rounding, 781 will be our actual answer. 781, and then add those two together, 382. Excuse me, it's a discount. We're subtracting. 38253, right? I didn't mean to say add. Here's our original amount, here's our discount. So this is the actual amount of cash that Venice Cafe sent that check for. Okay, and they took the discount on their own because they knew that they were going to get the get it in early, and so we haven't recorded it beforehand because we don't know when they're going to pay it. So this is why it has to happen at this point. And then on the 20th, recorded cash and credit card sales. So again, another check mark. It's a TS for 39. And it gives us, again, it gives us all of the dollar amounts that we need. So the sale of merchandise, 5624.45. The sales tax, $320.59, and then the total. Okay. And then on the 28th, received cash on account from Washington City Schools. Receipt 266. 1509. Okay, they didn't take a discount. They didn't pay it early. So the amount of the accounts receivable is going to be the same amount as the actual cash we received. Oh, 45. Gotta read my own writing. 45. Okay? So again, to recap, this sale was already made. Okay, so that's why we're not recording anything here as a sale. We're just recording it as receiving cash and decreasing the amount of the accounts receivable for our customer. Taking into consideration they paid early, they got a discount, and this is the actual amount of cash we received. For this transaction, it was just coming out of the cash register. We don't know the individuals that bought it. We don't care. We're just going to put those check marks in. We're going to look at the total amount of sales. And then we're going to separate the sales tax out. And this is the total amount of cash that was in the drawer. So these two added together. Okay. Venice Cafe owed us money, paid us some of the money, paid it early, so they got a little bit of a discount. Another cash sales, and then Washington City Schools paid, but they did not take a discount, so you can see how those two numbers are the same. Okay, so this one was a pay on account, right? This was a cash sale, pay on account, cash sale, pay on account. It's just that this one was with a discount. This one was with a discount. And this one was without a discount. All right. So the next thing really is flipping all the way to 10-4 instructions. We're going to post. We're going to total. We're going to prove cash. And then we're going to post the totals. Okay, and prepare a schedule of accounts receivable. We did that at the end for the schedule of accounts payable too. So a few little extra things in here. Again, the cash, proving the cash is something a little bit different. We just want to make sure that the cash matches our checkbook. And we've done that before too. So that's not new. All right. So let's go ahead and get these totals. September 30th is where our end of the month is. Okay. We don't have anything here. Don't need to worry about that. Our totals here, 4, 0, 8, 9, 15. Totals here 10, 9, 5, 0, 7, 5. Total here, there's look at that. See, I knew there's something wrong. I put it in the wrong spot and I didn't catch it. Hopefully you caught it. Make that correction. Eek. Add, there we go. All right. 618, 74, and these two, 51, 60, and 15, 607, 04. Okay. Again, with the debits equal credits, it gives you the space to do that. General debit, general credit, we didn't have anything. Accounts receivable credit, the 4089. $15. The sales credits, the 10950, $75. Sales tax payable credit, 61874. And sales discount debit, so these are our debits now, 5160. And cash debit, 15607. 04. Okay, and then we'll just add those